Hello, guys. Good evening. Can you hear me? You can hear me? Please type yes. Please type yes if you can hear me. So far, I have only 1 yes. That's not good enough. I need more so I can tell that you can all hear me. I have 1 more yes. Still, it's not good enough. I need more. So please, if you can hear me, type yes so we get started as soon as possible. Okay, I think I have what I'm looking for, so we can get started. You're all welcome. How has your week been so far? I hope you've had a good week. And you can see some of the pairs we discussed during Sunday's market outlook are playing out. And if you especially know how to trade the daily cycle, if you understand time and price analysis, then between yesterday and today, you should have made a lot of money because there have been a lot of beautiful intraday setups. A lot of beautiful intraday setups. Those of you who understand those concepts, I believe you capitalized on them. If you don't understand the concepts, don't be discouraged. Make time to watch the videos. You may not understand everything the very first time you watch. But as time goes on, or as you watch it several times, you come to understand the concept. Like I've been telling you, some of the concepts I'm teaching you, I seem to understand really, really well. I had to watch the videos several times to understand them. It's like that. So if you don't understand them now, as you have watched them, do not let that discourage you. Watch them again, over and over. And trust me, you improve. And you realize that you come to understand the concept seamlessly. That is when you start to spot really, really good setups. You can capitalize on them to make good money. For instance, gold, GBP USD, GBP JPY, between yesterday and today have given really, really good setups. I've already made over 300 pips for the week. Yeah, today gold alone generated over 200 pips. Can you imagine? There was a very nice landing session sale. We'll be looking at it because we are going to talk about the essentials of day trading. In my opinion, I think it's the best way to trade as a retail trader. Other people can have other opinions. It's all good. But in my opinion, I believe that if you are doing something and you are something that is making you money, something that gives you evidence of making money every day, which the daily trading program has the potential or ability to make you, enjoy. It will motivate you a lot. Let's say you are trading a daily cycle. Today you've made $50. Tomorrow you've made $50. The day before, the day after you've made $50. 5 days in a week, how much is that? That's $250. That's about 1,400 cedis. It will interest you to know that that is some people's salary. And you have made it in a week, trading the daily cycle. So it's a really good thing, and we're going to look at it. So I'm going to share a new screen with you. We're going to Hantec MT4. It is best done on the MT4 platform because on TradingView, the period separators are a bit different and look a bit cumbersome. Okay. And also, this indicator or tool I gave to you people, the market hours tool, that is what is here. This is not an indicator that is going to show you buy and sells. No, it's just showing you what time, what session we currently are in. Okay. We have the blue one. I don't pay attention to that because that's Sydney session. I don't use Sydney session for anything. My focus is usually on the blue one, sorry, the yellow one, the green one, and the red one. The yellow one is Tokyo session, the green one is London session, and the red one is New York session. Tokyo session is also the same as Asia session. London session is the same as European session, and the New York session is the same as North American session. Yeah, so we are going to quickly discuss the essentials of day trading. Then we'll be looking at a number of examples. Then on Thursday, God willing, we'll continue. This is a part 1 and 2 something. So on Thursday, we'll continue by looking at many more examples. The more examples you look at, the better it gets for you. Okay. So what are the essentials to day trading? But before we even discuss the essentials to day trading, what is day trading? That's the first question we must ask ourselves. What is day trading? It's simple. I've been telling you we have 4 types of traders. We have scalpers, we have day traders, we have swing traders, and then we have positional traders. Positional traders mostly are institutional traders. These are people who trade for institutions and are allowed to hold trades for a whole year. These people can hold trades for like a whole year, 12 months, or even more than that. That is positional trading. As a retail trader, you cannot do that. That is too long a time. And your equity is not that big. And so holding trades for that long can be costly in the sense that even the swap charges alone can take up everything. You get me? If you are not fortunate and then you enter a trade and the swap is negative and you are holding it for that long, it can end up taking a lot of your money. That is why positional trading is not ideal for a retail trader. It is for the institutional traders. So let them do that and you also do. Yes. You already know what scalping is. Just trading between short times, you get in, you get out. If you are targeting anything between 1 to 10 to 19 pips, that's scalping. Technically speaking. Anything between 10 to, let me say 5 to 10, to 19 pips, it's scalping, technically speaking. So now we come to day trading. What is day trading? What is day trading? Now, day trading is a type of trading where it's a type of trading style, let me put it that way, where you enter your trades intraday. When I say intraday, it means that you enter the trade in between sessions within the day. For instance, if you enter a trade during New York session, you are looking to close your positions by New York close. If you enter the trade during London session, you are looking to close your trades during London close. You get me? If you enter the trade during Asia session, you are looking to close your trades during Asia close. So it's a type of trading that gives you the opportunity to close your trades every day and book your profits if you did the right analysis. You understand me? So that is basically what day trading is. So you close your profits daily. Daily. Yeah, simply speaking, that is what day trading is. So what are the essentials and what do you need to look out for if you want to be a day trader? Okay, besides understanding the things I've taught you. So if you have a pen and paper, you should be writing. If you don't have a pen and paper, don't worry. The meeting is being recorded. After that, I'll post it. I'll download it, then I'll post it onto the channel and the group as well. I'll upload it there. So, what are the essentials you need? First of all, you need support and resistance. And if you were part of my support and resistance class last year, I told you that we have 2 types of support and resistance. We have natural support and resistance and implied support and resistance. Natural support and resistance, these are just support and resistance levels that came about as a result of price action. That is basically what natural support and resistance means. So it's natural, meaning it came about as a result of price action, unlike implied support and resistance, where you have to plot certain coordinates like Fibonacci sequence, Fibonacci retracement, Fibonacci extension, or pivot points, or cut off 1,000 theory. These are all implied support and resistance levels. Okay. But then with the natural support and resistance levels, you don't need to plot any of those tools. Those levels are generated by price action. So under natural support and resistance, we have yearly highs and lows, monthly highs and lows, weekly highs and lows, daily highs and lows, and even session highs and lows. And you have to consider these highs and lows, especially daily highs and lows, and then session highs and lows. If you want to trade, if you want to become a day trader, you get me. So those are the two things. That's one of the things you need. You have to understand natural support and resistance, especially with regards to the daily highs and lows and session highs and lows. Because like I said, you are going to be trading in between sessions. So you don't hold your trades too long. You hold them for a few hours and then you're out. A few hours and then you're out. If there's a lot of volatility in the market, it will not even last hours. It could take just minutes for you to get to your target. Then you're out of the trade. So basically, day trading is a shorter form of swing trading. A swing trading where you hold your trades a little bit shorter. Swing traders tend to hold their trades for days, weeks, sometimes even a month or even 2 months. But as a day trader, you hold your trades for a few hours. So day trading is basically a shorter form of swing trading, and it's a very good way to trade. And I've said that one of the essentials you need is your ability to understand support and resistance. You have to understand it. You also have to understand liquidity, fair value gaps, liquidity voids, equal highs, equal lows. All these things play out. You have to understand them. Do you get me? You have to understand all of these things. Now you also have to understand the essence of time. As far as trading the daily cycle is concerned, your timing must be impeccable. If your timing is wrong, your stop loss will get hit all the time. You may have the right analysis, but because your timing is wrong, your stop loss will get hit. So after hitting your stop loss, then the trade starts to move the way you analyzed it. It can be a very painful feeling. And all of that happened because you had the wrong timing. So these are the things you need. You need time. You need to understand the essence of time. You need to understand the concept of natural support and resistance, especially with regards to daily support and resistance, daily highs and lows, and then session highs and lows. You need to understand those things. Then you also need to understand the essence of time, like I said. Then you have to ask yourself, what else am I going to focus on as a day trader? You don't need to trade too many pairs. You can focus on 2, 3, 4, maximum 4 pairs. Okay, and master their movement. If you master their movement, trust me, you can make money from them daily. You can get 50 pips from this one, 30 pips from here, 40 pips from here, 60 pips from here, all within one day. At the end of the day, it's a lot of pips. Like today, I was trading gold and I was trading GBP USD and I traded GBP JPY. These 3 pairs combined have given me over 300 pips today alone. Yesterday, I traded gold and GBP USD and they gave me over 200 pips. So today is Tuesday. I've already made over 500 pips. And the people that are coming to the office to be trained, some of them had no clue because when they come and I'm teaching them, when I see setups, I tell them, and some of them take the setups. So some of them have started benefiting. You get me? That is why I've been telling you, those of you who are in Accra, you should make time to come by the office. A lot is being taught over there. Those guys are getting a lot of information. A lot of the information you've already been told, you've already been exposed to. But these guys too are getting a lot of information. Someone is saying my line is breaking. Is that true? Can you hear me clearly? If you can hear me clearly, if you can hear me loud and clear, please type yes. So I know it's not general. Type yes if you can hear me clear. The other guys can hear me clearly. So Nana Bonzi, I think the problem is from your end. Maybe your internet is breaking. or perhaps it's your audio setting. So please check. So let's continue. So those are the things you must look out for. Now, if this is your first time joining us, my panelist has just dropped our links. Some of the links are for you to register. One of them is for you to register with Hantec Markets, get a live account with us. And the others are for you to join our Telegram platforms. We have 2 platforms on Telegram, a group and a channel. We have discussions in the group about what is happening in the market. And the channel is where we have uploaded all of our previous webinars, so you can have access to them and watch them. So let's start. Now, if you want to trade the daily cycle, I'm going to give you some examples. Even though you are going to be executing your trades on smaller time frames, you still have to do your analysis from larger time frames. You cannot dodge that part of analysis. You have to always have a higher time frame premise. All the time, you must have a higher time frame premise. Okay. Then, if you know that the trend is bearish, when you come to the smaller time frame, you're only looking for what? Bearish setups. So we are going to look at a couple of examples. Let's start with there were some nice intraday moves last week and this week. So let's start with GBP USD. That's a pound, British pound paired against the dollar. You already know. So if you want to do day trading, analyze your. First of all, start your analysis from the bigger time frames. I've already said that. You can start from weekly. Now, if you go to the weekly time frame, I want you all to pay very keen attention to what is happening here. The part I'm highlighting with the ellipse. If I zoom in, you will not see everything. You will not see what is currently happening. Okay, but this is where what I'm talking of. You can clearly see this is a break in market structure. The part I've highlighted. Let me make the highlight bigger. Oh, it just vanished. Just disappeared. This is what I'm talking of. You can see that we have a break in market structure down here. Okay. So let's place a horizontal line there. Then we go to what is currently happening. So this is our horizontal line somewhere here. Can you see how currently price is reacting to that level? Now I've been telling you GBP USD long term is still bullish, but there's a short term sell opportunity around this area because of that break in market structure. So you can see that the market is reacting to that level. As you can see, this week's candle is a bearish candle. Let's break it down. Let's go to the daily time frame. We have scaled down to the daily time frame. This is current price action. Yesterday's candle was a bearish candle. Today's candle too has been bearish. Look, a lot of multiple rejections at that side, but this is clearly consolidation. The market has been consolidated. That's why I've been telling you that at this time of the year, you should not be holding your trades for too long. 30, 40, 50 pips. Close a trade, book your profit. You are done for the day. Or with that setup, with that pair for the day. That's what I've been trying to get you guys to understand. I believe some of you understand, or all of you understand. Okay. So let's continue. So you can tell from your bigger time frames that this thing is clearly sitting on a good resistance level, which happens to be a breaker from the weekly time frame. And yes, a breaker on the weekly time frame and also a breaker on the daily time frame. Yeah, that's a break in market structure. So definitely the market will react to that zone. And because it's a resistance level, it will give us at least short-term sell opportunities. Now let's scale it down. We can even go down to 4-hour AC. Now we'll go to 4-hour. You see clearly from the 4-hour time frame, there's a lot of consolidation. Okay. But look, even within that consolidation, there are opportunities. Let me get rid of this now. Look at what happened over here. Clearly a break in market structure on 4-hour time frame also, right here. So this was where I sold it for. So you have seen that the weekly time frame, the daily time frame, and even the 4-hour time frame are all telling us that GBP USD was a sell. Now let's highlight that part and then see how we would have traded it. If you want to trade a daily cycle, you go down to 15 minutes or 30 minutes to execute your trades. I like the 30-minute time frame because things seem very clear on it. I used to look at the 15, but now I like the 13 because things seem much clearer there than even the 15-minute time frame. So let's go to the 30-minute time frame. Let me zoom out. That is today's price action. So look at how you could have traded it. First of all, I have told you to look at what? Daily highs and lows, session highs and lows. So what daily highs and lows are you going to look at for your reference? We've already established that it is sitting on a resistance level, on the weekly time frame, on the daily time frame, and even the 4-hour time frame. So today is Tuesday. This is today's price action on the 30 minutes time frame from one vertical line to the other, like this, is 1 day. So today is Tuesday. This is Tuesday's price action. So how could you have sold this pair today? First of all, you go to the previous day and look at the previous day's what? Trading range. What is the previous day's trading range? We are looking for support and resistance. This is the previous day. Here. This box is a previous day. So that's the box we are coming to look at. So what is the previous day's range? We are looking for what? Support and resistance. So the previous day's low, this was how low it went. Let me show you. This was how low it went. That's a low over here. And this was how high it went. That was yesterday. So that is your range. Place horizontal lines there to make everything seem more simple. So let's place a horizontal line at yesterday's high, which is over here. And let's place a horizontal line at yesterday's low, which is right here. What are we looking for? It's a bearish market. The market, GBP USD is sitting on a nice resistance level. On what? The weekly time frame, the daily time frame, and 4-hour time frame. So we are looking for what? Sell setups. Now look at the pair you are trading. GBP USD. There's a pound in it and there's a dollar in it. I've told you that this pair, because of the fact that the pound is a base currency in this pair, it tends to show a lot of its true nature during London session. Keep that in mind. It shows you its true nature during London session. Not all the time, I can say 90% of the time. Sometimes you see it move a lot during New York. But a lot of the time, it does its magic during London session. And New York session, sometimes, like I said, it does that because of the dollar in the pair. But a lot of the time is within London session. So with that in mind, you are looking for what? A London session sell opportunity. You have that at the back of your mind because you have established from the weekly and the daily time frames and the 4-hour time frame that this pair is what? Sitting on a resistance level. Now you know that it is GBP USD and it tends to do a lot of its magic during what? London session. So you should be looking for a London session sell opportunity even before you plot the daily range from the previous day. So we have our low and we have our high. That is our trading range. Okay. Now, you'll be monitoring it to see what is going to happen during London session. It makes things very easy for you. So now you have your daily highs and lows. Now you have to start to consider what? Session highs and lows. You have to look at the most immediate. Let me do something. Let me get rid of the Sydney session color so it doesn't confuse you. Now it's here. Go to indicators. Let's come to market hours. Edit. I have to change the color of the Sydney section. I want to look like my background so you will not see it. Light gray. Yeah, it's gone because I have made it look the same color as my background. So now we are looking at what? Asia, which is a yellow box here, the yellow line here. London, which is a yellow line here. And New York. Asia is a yellow line here. London is a green line. and New York is the red line. So because it's GBP USD, and because we know that this pair is sitting on daily resistance and weekly resistance, we are looking for what? A sell setup during which session? London session. London session. And London session opens at 8 a.m. I think it's either 8 a.m. or 8:30 a.m. Now that we are in the winter, it's within 8 a.m. and 8:30 a.m. Now, you have to wait. It's going to be a sell, right? So you have to wait for them to go up to clear the Asia session high before you place the trade. The reason you have to wait for that is so that you get a very good entry, so that there's very little or no drawdown at all. If you trade this way, the market will hardly hit your stop loss. So look at what happened. Let me change this. Let me change the color because I'm about to use red lines again. I don't want too many red because it may confuse you. Let's make this green. Now let's make this green as well. Okay, so I've made both of them green. Now, where is the Asia session at? Look at where we have this short horizontal line, the yellow one. That is your Asia session. So to get to Asia session box, what do? Take a vertical line, place it on Asia open. That is where the yellow line started from. Take another vertical line, place it on Asia close. Then you have your Asia session box. So when you come up here, anything that happened within that box was your Asia session what? Price action. So what is the Asia session high? That is it right here. Let me highlight it, then I'll place a horizontal line there. This is our Asia session high. Right there. So let's place a horizontal line there. Then we extend it to the right. You see? Can you see what happened? London session came. They traded above that Asia session high. Now, once they trade above the Asia session high, you should be looking for a bearish order block. Look for a bearish order block further left, and then take note of the fact that the London session has opened. And so you should be looking for an entry as soon as possible. Where is the entry? Is there a bearish order block right on top of it? Yes, there is. This is it right here. That is a bearish order block over there. So that is where you are going to enter. And look at when it started. Now, you know the Asia session range. So I can now move this vertical line. Look at where it started. I'm moving it to the London open. That is where this green line started, this green horizontal line. Look, you see? So your entry would have been right here when they cleared the Asia high and traded into that bearish order block. That was right where I entered this trade this morning. It was around 8:30. So assuming you were like me and you entered here, what would have been your drawdown? How many pips? Your drawdown is just 3 pips. Just 3 pips. Now, you hold the trade till London session is what? Over. Where did the London session close? Where the green line closed. So your exit would have been somewhere here. So how many pips would you have made? Your drawdown is 3 pips. Your take profit is 82 pips. So let's calculate the risk to reward ratio. This is unfair. This is unfair. So you risk just 3 pips. For how many pips? For 82. And let me do it. For 82 pips. 82 pips. So what is the risk to reward? Let's find out. So it's 82 divided by 2. That will give us about 41. So look at the risk to reward ratio. Yeah, 82 divided by 2 is 41. So your risk to reward is 1:41. Can you imagine? So you are risking $1. Basically speaking, you are risking $1 for $82 if you are trading with a mini lot. That's insane. So your risk to reward is what? 1:41. And that's serious. You see? So that's your entry over there. Now, where must you put your stop loss? Let's discuss that so that whenever you are trading, you know where to put your stop loss. Where must you put your stop loss? Let me show you. Now, this is what I usually do. Above that high, the Asia high, 30 pips above it. So you place a horizontal line there. Take your crosshair, click, drag it 30 pips up. I always risk 30 pips. That is it right here. 1.37, 1.37276. 1.37276. Let's see where that would have been. 1.37276. 1.37276. Look, the market didn't even get close to that level. So you would have been very safe. They didn't even get close to your stop loss. So you see, but if you enter, if your timing is wrong, they can easily hit your stop loss. Did you enter through limited order or instant execution? Instant execution. When I'm trading a daily cycle, I don't use pending orders because I'm waiting for the session to open. Then I'll enter. It's called the landing kill zone. So I don't use pending orders because I want a very good entry. So I'm monitoring it. As soon as the session opens, I get it. Or the landing kill zone. Kill zone because you are trading like an assassin. You are waiting for it to come to you and then you pull the trigger. That's why it's called the kill zone. So that is right how you would have traded. So looking for a sell setup on this pair because we have established from weekly and daily time frame and even 4 hour that it is sitting on a resistance level. When you come to 30-minute time frame, we are waiting. We are going to trade the pair during landing session because it's GBP. So we are waiting for landing session to open. And what are we looking for? We are looking for them to clear Asia session high. Then we get it on a bullish, a bearish order block. Let me give you other examples. That is not the only thing you look out for. Sometimes you don't look out for other blocks, you look out for other things. So let's look at yesterday. Yesterday, too, I traded it. I've been trading this pair since the beginning of the year. This pair and good. There are the only two I've been trading. And GBP, JPY. Yeah. There are the only three I've been trading. Now let's look at this. Yesterday, this was yesterday. This was yesterday's price action. So how would we have traded yesterday? With at the back of our mind that this pair is sitting on a resistance level from the weekly and daily time frame. Once again, to consider the previous day's what range to get your support and resistance, your natural support and resistance. This was the previous day's low right here. This was the previous day's high right over here. Okay. Once again, you have to have at the back of your mind what pair are you trading? GBP USD. So you are looking for what? A sell setup doing what? Landing session because of the GBP in it. When the session hasn't ended, how do you take your profit? You close it. It's simple. If the session hasn't ended and you want to get out of the trade, you simply close it. It's as simple as that. So this was yesterday. And then the previous day's price action, that was Friday. You know, yesterday was Monday. So Friday's price action is our reference. That's our reference. So we look out for Asia session highs. So Asia session price action, what do? You know, I've told you this yellow line is indicating Asia session. So take your vertical line, place it at the open of Asia session like this. Take another vertical line, place it here. So you get the box. So that's your Asian session box. Now, anything that happened inside here, anything that happened inside here, it's your Asia session. You get me? So what did they do during Asia session? They used Asia session to clear the previous day's high. Look at it. This is a previous day's high. That is a drawn liquidity. So they use Asia session. You can see that during Asia session, they traded up to clear that high. You can see it right here. It's very, very evident. So once Asia closed and London opens, You should be looking for opportunities. Now let's look at what happened during London. That's our Asia session box. Now we know that this is a high. Now, Asia session traded up to close to clear the previous day's high. What should that tell you? Turtle soup sell model. So you are now looking for what? We are now going to execute a turtle soup sell model because we have an old high that has been cleared, an old high from the previous week. Now, after Asia session cleared that high, look at what it did. Created a bearish order block right here. So yesterday when I was trading this, once I saw the bearish order block, I drew it. Then I waited for London to open. So when London opened, I entered my trade right here on this candle. When it entered, when it traded right back into that bearish order block from the Asia session, I knew that they had already cleared a previous day's high. And so the chances that they would have gone down immediately was high. You have to consider all those things. That is why I taught you natural support and resistance. Okay. So the previous day's high has been cleared. Asia session has created a bearish order block. We have drawn it. Now we are waiting for what? What do you call it? London session to open. As soon as London open, you should have entered the trade. Now he traded right back into the bearish order block right here. So I entered over here. Where was my take profit? The previous day's low. Here. Why did I target this as my take profit? It was too clean. That low was too clean. That's an equal low. One low from this bearish candle, another low from this bullish candle on the same level. So I knew they were coming right there. So it hit my take profit. As soon as it hit my take profit, the London session closed. Look at when London closed. That was a London close. So the trade ended right, immediately hit my take profit. London closed. Some of the guys that were at the office saw it because I showed it to them. So it entered from here. I entered from here. What's the drawdown? Just 11 pips. That is not significant. 11 pips because my entry is very good and my timing is impeccable. I raised 11 pips for 72 pips. So what's the risk to reward? Almost 1:7. So let's say 1:6. That is serious. So when you enter from there, where will your stop loss be? Your stop loss will be 30 pips above the new high. Or in order for you not to get a big stop loss, look at where you entered the trade. This is it. That was where I entered. Right at the edge of this bearish order block. Okay. That was my entry. So I calculate the number of pips from my entry to the high. 26 pips. So my stop loss should be what? Just 4 pips above that 26, that high. So that my stop loss is 30 pips. That is how much I usually risk. So you see, that is 30 pips over there at 1.37611. Did the market go there after I entered? When I entered on the bearish order block, did the market go there? No. My drawdown was just 11 pips. Then my take profit was 72 pips. Risk to reward is like 1:6.9 or 1:6.8 or 1:6.7 thereabouts, if I'm not mistaken. So you see, my entry was really, really good and my timing was perfect. So the drawdown was very little. Then I went into profit just a few minutes later. If your entry is right, it doesn't take time for your trade to start moving. If you are trading the daily cycle, if you are doing swing trading, it may take a while. But if you are doing the daily cycle and your entry and your timing are both right, the market tends to move in your favor straight away. Now let's look at the previous day. That was Thursday. I was part of this buy. Why did I buy it? Let me explain to you. First of all, let me get rid of these numerous lines. So I'll highlight that place and then we'll look at it on the daily time frame. Then we'll see why I bought it. Let's go to a daily time frame. That is it here. Wow, look at how it is looking tiny over here. It's very tiny on the daily time frame. So that is it right here. This one. Scale it down to 4 hour. Order block. Can you see it? Bullish order block. But it was a counter trend trade, which is something I'll not advise you to do. If you're not highly skilled as a trader, don't try counter trend trading. You get yourself into trouble. So I knew the buys were very short term. And it was because of this bullish order block. Now let me go to 30 minutes and show you. You see? Now look at what happened on 30 minutes. It happened during London. So you must consider the time. The time is very important. Okay, so this is a zone. I think I can delete it now because you guys can see where the zone is. I've deleted it. So the previous day's high and low. This is a previous day's low. That was last week. Was it Thursday? Yes, Thursday's low. This was Thursday's high. Asia. This is Asia. Let's place our horizontal lines to cover our Asia box. To get our Asia box. So the opening of Asia, that is this yellow horizontal line, and the close of it. That is this yellow horizontal line where it ended. So where's our Asia session low and where's our Asia session high? This is our Asia session low. Let me show you. So I realized that the market was trading down. That's not our Asia session low. Okay, yeah, that is it within the box right here. Yeah, that's our Asia session low. So this is it. That was the lowest. This was the lowest. This is it rather. Yeah, there's a low here. The line blocked it, so I couldn't see. Let me move the line a little so you see. This is the low I'm talking about. Yeah, that's the Asia session low. So I realized that they were going down. So if they were going down during Asia session, then it suggested to me that then during New York, these guys are likely to go up. And during London, these guys are likely to go up. So it prompted me to look at the previous day's price action. That was Wednesday, last Wednesday. So when I looked at it, I drew my lines. Then I saw something very interesting happening here. I saw the low, they were obviously coming down to clear. And I also saw a fair value gap right here. Fair value gap right there. Something like this. That's not well drawn. Like this. So they came down during that time to clear the low and then to fill the gap on that fair value gap. Fill the gap over there in the fair value gap. So as soon as it came down here and the landing session started, I didn't even wait for them to touch the order block. I just jumped in. So this was where my entry was. Let me show you. This trade, there was no drawdown. I entered right here. As soon as landing opened, right here. That was my entry. Why? Because they had filled the gap and landing has started. So I knew we were going to see a reversal. Where was my target? The previous day's highs. Yeah. Too clean. These highs are too clean. Equal highs. Looking too clean. So I knew that the fact that it's looking that clean means there's what's it called? Liquidity resting right there. So the chances that they'll go up there are very, very high. So I entered the trade from here and there was no drawdown at all. But even that, I had my stop loss below this low, the previous day's low. So how did I get my stop loss? From my entry to that low was how many pips? 26 pips. So I just moved 4 pips further. My stop loss was somewhere around 1.36265. And look at where my entry was. Did they come there? Not even close. There was no drawdown straight. Moved all the way 89 pips, almost 90 pips. No drawdown. Simple. within a few hours. This is a 30-minute time frame. So every 2 candles is 1 hour. Or to put together is equal to 1 hour. So this is 1 hour, 1 to 1 hour, 2 hours, 3 hours, 4 hours. So within 5 hours, my take profit was hit. I'm done. And as if by design, that happened. The take profit got hit during landing close. See, okay, it was before landing close. So before landing even closed, I was out of the market. Just 5 hours. Before landing close, I had taken my profit. And I'm done. You see, this is mastery. This is something you must work at. Your entries, work at them. Now, on Wednesday too, I traded it. Last Wednesday, I traded it once again. What did I see? It was still around that buy zone from the 4-hour time frame. And something interesting happened again. Let me show you. First of all, we look at the previous day's low. This is the day we are talking of. This is the previous day's low. That was Tuesday. Tuesday's low. Tuesday's high. So we place our horizontal lines there. Tuesday's low. These things are not difficult. Tuesday's high. That is my range. Then I'm always very interested in what happens during Asia session because it will tell me what I have to do during London. So what happened during Asia? Let's find our Asia session box. Take a vertical line, place it on the Asia open. That is this yellow horizontal line. Then the close of it. That's how we find our Asia session box. That is our Asia session box. So I'm interested in what happens during what? Asia. So I realized that during Asia, this thing was coming down. It's called a Judas swing, and we'll be looking at it next week or next 2 weeks. The Judas swing, I will explain it to you. How that forms the manipulative phase of the market. So Asia session, you can see that this market was coming down. So if you are someone who likes to trade Asia, you could have had a few pips from it. You could have had about 38 pips from it. I don't like trading the Asia session. By then I'm asleep. I don't like trading that session. So let's forget it. If you want to trade it, you can trade it. So that's our Asia session box, right? So now what happened during London? So this move down was just to clear the previous day's low here. And once a significant old low is cleared, we're anticipating a turtle soup buy. What are significant old lows? Yearly lows, monthly lows, yearly lows, quarterly lows, monthly lows, weekly lows, daily lows, session lows. When the market clears them, you have to pay attention to what is about to happen. So it came down to close a previous day's low. That was Tuesday's low, last week Tuesday's low. So that's a significant low. Then I looked further down, below that low, what is resting there? And it is going down during what? Asia session. That means London session, we are likely to see a reversal. So when I looked below that low, this was what I saw. Very beautiful bullish order block right here. So I knew, wow, there's going to be a turtle soup buy model. So what happened during London? Let's place our vertical line on the London open. You see, during London, they traded into the London open, they traded into this bullish order block. So my entry was right here on this bullish order block. Where was my stop loss? Below this low, below that order block, somewhere here. That was where my stop loss was. But how many pips did they move as a drawdown before they started moving up? For my entry, just 9 pips, 8.9 pips. So we'll say 9 pips. Now the 89 is not 89 pips, it is 8.9. So that is 8.9 pips. So let's say 9 pips. That was my stop loss. Yeah, that was the drawdown on my trade. Where was my target? Now I looked at this high. That was New York session high. I'm talking of this high. Let me show you. I have to pay attention to all these things. How did I know it's New York session high? My box. It happened during New York session. It was not the high, but it happened during New York session. This is a session high. New York session box. Yeah, that was New York session high. Look at it. I place a vertical line here. New York open. The red line. Now I'm looking at the red line. New York close. So within the box, how high did the market trade? This was it. This high over here. Let me draw a vertical line for you to see. That is it. This was my target. Yeah. That high was my target. So how many pips? The drawdown was 9 pips. Take profit, 91 pips. So that is 1:10 risk to reward ratio. That's serious. Risk 9 pips for 91 pips within a few hours. This was my entry. There was some form of consolidation before it moved. So I entered somewhere here. So how many hours? 1 hour, 2 hours, 3 hours, 4 hours, 5 hours, 6 hours, 7 hours, 8 hours. I'm done. So it's like going to work from somewhere, let's say from 8 a.m. to somewhere 2 p.m. or somewhere 4 p.m. 90 pips. That's a lot of money. Imagine you have a $10,000 account and you are trading with a standard lot. That's $9,000. You made almost 10% of your money back within a few hours by risking how many pips? 8 pips. So with a standard lot, you would have risked only $80. 9 pips, you have risked only $90. And you would have had $9,000, $900 in return. Sorry, not 9,000. $900 in return. That's almost 10% of your account within a few hours. So you see why I love Forex. It's only business where you can risk small and get plenty. So that was how I traded it last week, Wednesday. Was it no Wednesday? Last week, Wednesday. So these are the things you should be looking out for. So you can choose to focus on just a few pairs and master them. You can decide to trade only GBP USD, Euro USD, and gold. And these pairs all have a strong negative correlation with the dollar. Now, gold is so beautiful that it can give you nice setups, counter trend setups, counter trade. Maybe I have to teach you guys how to do counter trend trading. Because if you are not a very skilled trader, you try it, you cry. It requires high level of skill. So I've been doing that with gold since the beginning of the year. I counter trade during London session, then New York session. I trade the real thing. Counter trade London session, New York session. I trade the real trend. That is what I've been doing with gold since the beginning of this year. But I'll stop doing that when the levels set properly. And now most of the pairs have found their structure. Because that is when you start to see swing trades. Around this time is the best time for day trading. So you must understand the essentials of day trading. So you can make money from this market. There are so many opportunities in this market. You just have to understand the concepts and you become stopless. You become unstoppable. Is there a word like stopless? I don't think so. But I know there's a word like unstoppable. So you see how you could have traded this. That's just one pair. Within 1 week, how many pips has it made you? A lot of money, guys. A lot of money is to be made. Now, these levels it's hard to give them during the market outlook. This is the reason. You see, I showed you I enter when the London session opens. So this one is such that you must be behind your computer waiting for your session. When your session comes, you pick the trade. That is why during the market outlook, I cannot tell you that they are going to go to this price during London session before. No, I can only observe. When it is time, I place the trade. And that is what you must do also. You understand the concept. So now just wait. When it is London session, you take the trade. So this market hours indicator is something you must all install. It is very, very good. It's not going to show you buys and sells. No, it's just showing you the market hours. London session, New York session, Asia session. That's what it does. The yellow line is Tokyo session. The green line is London session. And the red line is New York session. Now let's look at gold. Then we can close for today. I was selling gold this morning. Now let's analyze gold's sell for today. This sell. And I'll show you guys something. Before that, let's look at it from the bigger time frames. Always make sure you analyze it from the bigger time frames. Can it appear bigger than this? Yeah, I think it can. Let's first of all clear these horizontal lines so you see. This is a weekly time frame. We have a nice bearish order block from here. That gold has been respected. It has been consolidating. It has been respecting that order block, that bearish order block. I think gold is going to go long term down to this. Did I say long term? I think it's going to come here before the price. Expect them to go up to clear the all-time high after they have traded into this level. So that is my higher time frame analysis. So when I go down to the smaller time frames, I'm just looking for entries. Come down to clear this low, clear this low, clear this low, trade into this bullish order block, then go up to clear the all-time high. This is my, but then the dollar will become weak. The way you see the dollar has been strong since 2 weeks ago, it's just a correction. Very soon we see dollar weakness again. Maybe from March going. Or even February it's possible. I'll look at the seasonal tendencies and I'll let you guys know. But the chart has been posted on the channel. When you look at the seasonal tendencies chart, you know what gold is likely to do in the coming months. So look, bearish order block, gold has been respecting it. What do I mean by it has been respecting it? We can see multiple rejections. So I know that it's at a good sell area. That's from the weekly time frame. We can scale it down. Let's go down to the daily time. Now, if you look on the daily time frame, this is how it looks like. Yes, there's a fair play. There's a fair value. Currently, gold is obeying frame. And the bearish order take a lot to go up to clear these highs. Now, as far as those highs are concerned, this is what I'm thinking. To fill that gap. Something like this. This is a possibility. Trade right into this bearish order block. Then they sell heavy. That sell, if it does happen, will be very aggressive. One of those crazy movements where one pair can go more than 1,000 pips. Gold has been doing it. It did it last year. 4 times last year. It can do it again this year. So this is a significant low. That is the low from December that they are looking to come and clear. They can clear it. If they clear it and trade into this bullish order block, then we can expect them to go up to fill that fair value gap and trade into the bearish order block I just showed you. Okay. So let's see how I traded gold today. So now we know that it is respecting a bearish order block from the weekly time frame and a breaker on the daily time frame. That means what? Resistance. So let's go down to 30 minutes. So this is today's price action. From this vertical line to this vertical line. This is it. Let me show you guys. From this vertical line to this vertical line is today's price action. Okay. So what? Now let me show you. Previous day's low is where? Here. Let me highlight it first. The previous day is whatever happened between this box and this box. That's the previous day's low. And where is the previous day's high? That is it. So we place horizontal lines there. Place one here, and we place another here. That is our range. Okay. Now, I know that gold is on what? A resistance level. Where's our Asia session box? From here? Here. So anything that happened between here and here is Asia session. Staring at you. Okay. Now look at what they did. There was an entry here that you could have taken. Assume you missed. This was Asia session. By then I was asleep. Me, I don't read Asia session. But this happened during the London and New York overlap. They traded below the previous day's low. I remember the higher time frame premise is showing us that it's sitting on what? Resistance. They traded below that low, and then went back to quickly retest it. So that retest could have been your entry. That's where you could have entered gold from. On this bullish candle, that was a retest. Let me zoom in for you guys to see something. This was a candle. This was a candle that went back up for the retest. There was multiple retests here. Okay. Now this one happened during the London and New York overlap. So this line over here, after the retest of the previous day's low, that was yesterday's low, could have been your entry. Now, assuming you entered for there, assuming you entered, I'm mixing English with Pidgin. Assuming you entered over there, what should be your target? Look further left and look for liquidity. Look, equal lows. That was from last week. Very obvious. That could be your target. Liquidity is resting right there. So assuming you entered gold from here after they broke the previous day's low, that was yesterday's low. So your target is how many pips? 147 pips. What was the drawdown? Assuming you entered on this candle, this bullish candle over here, this green candle, your drawdown would have been just 12 pips. Now, from your entry upwards, I usually use a 30 pip stop loss. I don't know what stop loss you like to use, but I usually use a 30 pip stop loss target. Okay, so from there to the 146 pips. In how many hours? This is a 30-minute time frame. Every two candlesticks is equivalent to 1 hour. So 1 to 1 hour, 2 hours, 3 hours. You need 147 pips. You are done for the day. Go and sleep, go and relax, go and chill. Understanding this concept is very, very important. Now, let's see what happened. Yesterday, it was too much consolidation, so we'll not pay much attention to it. Now look at what happened. Yeah. I was part of this buy and I was part of this sell. That was on Friday. Let me show you how I took it. How do I trade Friday? I'm looking, and this was the highest it went. So we placed horizontal lines. Thursday's low, Thursday's high. Okay. Where was it that your target is not the this high as your I don't get what you are saying. You have your language is not clear. Why is it that? Why was it that your target and not this high as your target? I don't get what you are saying. Because liquidity, please watch my video on liquidity. You understand why that was my target. Have you treated seasonal tendencies to it? I didn't. I just gave you charts on it. So when you go to seasonal tendencies, so you just look at the chart. And then